Welcome to Pattern Alpha's Exhaustion Zone indicator, and if you're watching this, you've probably just bought the access to the Exhaustion Zone indicator. Also make sure to check the text file that we're sending with the purchase so that you can get access to your indicator on TradingView. In this video, I'll show you how to set it up, what it is all about, and how to use it for your trading. First of all, once you have sent us the email requesting the access to TradingView and received an email answer from us, you can go to Indicators. Then you go to Invite Only, and then you will find it under Exhaustion Zones. We click on it. After a short loading time, it may look something like that on your charts, and I will show you now how to set it up and what is this all about. So when we open our settings here in the top left, you can see that you have a few inputs. We show history is the first one, which means basically that you can decide whether to just show the current exhaustion zone or also the 12 previous ones. So you can tick that on and off depending on how you want to use it. Then you can choose between the display daily and display weekly. Daily exhaustion zones are the one marked in red. Let's turn this off first and we're gonna take a look at it. And the daily zones are generally for the lower time frames, anywhere below 30-minute, 15-minute, maybe 5-minute, 1 minute. Generally, if you go higher, we would recommend setting up the weekly zones, but you could even go for the 1 hour and also use the daily zones. It may as well just work fine. And what this means is that every day you will get a new exhaustion zone drawn above and below the current price action. And we will go into those zones in depth and how to use them in a bit. But basically what this means is that at the beginning of the day, the indicator will look back at previous price history and then estimate how far is the price likely to move on that given day. And you can see that those are the boundaries of the exhaustion boxes. And what you will often see is that a trending market, if it reaches an outer or comes close to an outer exhaustion zone, will often reverse. Trends are likely to end or stop and pause. And how to use that, we're going to take a look at in a moment. On the other hand, we can also turn on the weekly exhaustion zones. And then you will have those yellow zones that we can see here. Generally, those are for the higher time frames because they are the exhaustion zones for every week. So at the beginning of the week, you will get a new yellow box, and the yellow box will last until the end of the trading week. And then the next trading week, you will get a new yellow box indicating the updated exhaustion zone for the coming week. Now let me show you the basic mechanism behind the indicator, and then in the next part we will go on and I will show you how to use the indicator in your trading. So what we have here is the daily exhaustion zones. They are turned on and we have just started a new day. You can see that the previous exhaustion zone has been finished and the market created a new exhaustion zone above the price and also below the price action. And the indicator looks back at the previous price history. It analyzes momentum information, trend strength, and it calculates how far is the price likely to move on that given day. So what you will see is that from this point where the market is currently, this is its upside potential and this is the downside potential. So what you will see as the price progresses in that day and moves up or down, the zones will automatically also adjust, of course, because let's follow the price action. And as you can see, when the price moves down a little bit, this upper zone will come down a little bit as well. Why is that so? Because the distance has changed to the zone and the daily potential for the price movement has not changed. So to still accurately reflect the distance between the current price, where the current candle is at, and where the trend is likely to end on that given day, now the exhaustion zone has adjusted. So that is how the exhaustion zone may move during that day. What you will see is that once the price action hits one of those zones, it will stop calculating and the zones will not move anymore. So you can see here when we follow the price action, price is now reaching the lower zone and the upper zone has disappeared because this market for that given day has reached its daily potential. So this is how the indicator is working and this is how we've set it up to show you the price potential. So once the price action has reached the upper or the lower zone, the opposite zone will disappear because this market has now fulfilled its daily potential. And very often you can see that the market is reacting at those zones. It doesn't automatically mean that you should go long here, but if you are, for example, in a downtrend, and I will show you how to find and use this indicator for your trading, it is a good idea to use that maybe to take profits and get out of your trades. Of course, sometimes the market will just move through such a zone, but in general, you will often see see a reaction at those zones. And this is how we intended it to use. And you can see after the market hit this zone very precisely, there was a very strong reaction. On that next day, you can see we get a new zone above the price, below the price. As the price moves higher, you can see that the lower zone has also moved up. Why is that? Again, because the current price action is now higher compared to where it started on that day. And to make sure that it still reflects the daily potential, now the zone has come up and reflected that as well. So that's very important to understand that the zones may move during that day, but only as long as it has not reached the zones, and it is to reflect the daily potential accurately on your charts. Now in the next part, I will show you how to use the exhaustion zone indicator and give you some tips and ideas on how to use it in your trading. Obviously, this is not conclusive and you can use the indicator in many different other ways, but let's start here with a few ideas. First of all, when we look at this chart, you can see we are in an overall downtrend. The market has been moving lower steadily, so it makes sense to look for trades into the trend direction, in this case short. What we can see is that we are currently looking at a flag pattern here. So on that given day, the market moved higher slightly, not really strongly, and we have built this flag pattern. We can even add here this upward trend line to really define the flag. And the indicator now helps us to estimate, is there enough room for the trade to move? So if we want to go short on the breakout, is there enough space between the price and the lower end of the exhaustion zone? This is important to note because if we want to take profitable trades, we must make sure that there's enough room for the price to move. If, for example, you would take a trade and right away have the exhaustion zone be there, it wouldn't make too much sense because the market has not a chance and there's a low likelihood for the market to actually move in your favor quite a bit. But in this case, it looks good and a breakout out of the flag could be an interesting trading idea because there's enough room to the downside. So now the market has broken out of the flag. We see a retest in the flag, which is also a separate signal. And you can see the market started to move lower. And we follow the price action here as it unfolds on that day. And now the market has reached the lower end of the exhaustion zone. Of course, there's a chance that the market will just move lower through that exhaustion zone, but we would recommend to at least consider taking partial profits if you are not using that as a complete exit for your trades, because the likelihood that the market may move through it is very low. Of course, sometimes it may move completely through the zone, but that is very rare. Usually happens during news events or other very important unfoldings in the world of trading. And you can see here, when we just follow the price a little bit, the market did move actually a little bit lower before it then turned around, and you can see the market did reverse higher. So first of all, it makes a lot of sense to look for the potential. Is there enough room for you to make enough profits? And also you could use that zone then to time your exits in an effective way. Here is a different example, and we are also looking at a potential breakout idea. You can see the market move back into a previous high. And when we look at the exhaustion zone now, the exhaustion zone is now very close to where the potential breakout level is. So there's very little room here. And in this case, it would probably not make a lot of sense to get into a breakout trade on that day because the likelihood that the price may reverse here is quite high. Of course, sometimes it will break higher, but in trading, we always want to make sure that we have the odds on our sides. And in this case, we really don't want to trade into such a very important obstacle. The reason why the exhaustion zone is already so close is because here is where the price action started on that day. And then since the beginning of that trading day, the market has already traded higher for quite a bit and almost reached its daily potential. So it doesn't make too much sense to look for a breakout here because your upside is significantly limited. And let's follow price action and let's see what happens. The market did break out here, but you can see the market is already reacting here at the first exhaustion zone. And let's follow the price action and let's see what happens. After a double top, the market is pushing again into it. And what is happening now? You can see the market is struggling and it never really pushed higher. So you can see we have a triple top now. At this point, the market failed to push higher. It wouldn't be a great position to be in if you are decided to trade a long breakout, and you could have avoided such a trade because the daily potential for this to move much, much higher is very low. If you are a trader on the 1 hour, the 4 hour, or you just prefer to have a broader picture with longer holding times, then we recommend to open the settings and change it to the display weekly. And in this case, you will then get those yellow exhaustion zones. So in this case, you can see the market is in a strong uptrend, moved higher quite a bit. But here recently, the price action seems to be struggling and it's moving in this channel. So in this case, we could think about a potential trade idea here as a reversal. or as a continuation. So either thing, you could create a trading plan and make sure that you are trading a breakout. As soon as the price breaks out of this range, out of the channel, you are going to initiate a short, or maybe you trade a break and retest approach. In this case, again, we use the exhaustion zones to estimate, is this a worthwhile trade? And we can see that the price action is pretty far away from the lower weekly zone and also on the higher weekly zone. So to both directions, there is enough room here to probably get in a decent reward to risk ratio. So in this case, we use the exhaustion zones to scan and filter out bad trading opportunities where there is not a lot of room, and make sure that when we are in a trade, there is a lot room to move for our trade. And let's follow the price action. And you can see we already have the breakout. Let's get rid of that. And in this case, we could then start to target the lower side of the exhaustion zone. And keep in mind, this is the weekly zone. So this stretches all the way from Monday morning to Friday night on your charts if you have activated it. And the market keeps going, and you can see the lower end of the exhaustion zone has already been reached. So what do you do now? You could think, first of all, of taking a complete exit. If this is all you want, you can be done with that market. Or you could think about scaling out of the trade, or you could just leave your position open and see how the market is reacting to those zones. If we follow the price action a little bit longer, you can see as soon as the market hit the zone, it's already slowing down. So what has happened previously, the strong trend seems to be not as strong anymore. Let's follow the price action and see what the market is doing. We see a little bit of a reversal, not too strong. It could just as well be a regular consolidation here. Then let's follow the price action. It looks like it's gaining some momentum again. Here's the previous lows. And what do we see now? A strong reaction again at the previous lows at the upper side of the exhaustion zone. So at this point, it doesn't make a lot of sense to hold your short position if you are still holding some portions, because the market has shown not only that it is struggling here after reaching its weekly potential, but also it failed to break through another low. So at this point, it's very unlikely to see a further continuation, and you're better off closing that trade instead of holding it and hoping that it may return to the downside. Some traders may start using the exhaustion zones to find trade reversals. So maybe you have missed the boat and you didn't participate in this nice daily trend, and then you see the market is reacting and reaching the zones here. However, this can be a little bit more risky because there's a chance that the daily trend will just continue. So first of all, we never recommend to start using and trading blindly just because the market has reached the zone and then get into the opposite direction. We would always recommend to wait for a little bit more confirmation. First, wait for the market to move away from the zone, then wait for the market to establish here a consolidation area, and then think about trading a breakout or a pullback approach away from the zone. That is a more realistic and more robust approach than blindly shorting just because the market has reached the upper end of an exhaustion zone. Here is an example of how we can use the weekly zones to find reversal trades. The weekly zones carry a little bit more weight than the daily zones, and there's a higher chance that after a trending period, when the exhaustion zone on the weekly has been reached, there's a higher chance that the market will actually reverse. However, again, we never trade those blindly, and we're going to look for some confirmation. So here we can see overall the market has been in an upwards trend for a long time, multiple weeks as the exhaustion zones indicate, and the market has reached this higher zone. It also did that last week, but eventually it kept going higher. So what do we do now? First of all, we estimate and analyze the market structure. We can see the market has been making higher lows and higher highs. As long as this structure is in place, we will not go short against this market because this classifies an upwards trending market. We can follow the price action. You can see we have a reaction here at the previous low. The market keeps moving higher. And now things have changed quite a bit. You can see that the market moved into the previous highs, back into the exhaustion zone for a second time. Now we not only have a double top, which has held, but you can see we have a very strong reaction. This bearish candle engulfs the last few days of price action. So this is a very strong signal because it indicates a very strong sudden shift of the bullish and the bearish powers. It also fits into this context perfectly. We have reached the exhaustion zone. The price has been trending for a few weeks. It makes sense that many traders are looking for exits, and also we have this failed breakout at the double top. Now what we are doing is we're waiting for the market to break the structure before we get into a trade. You could, for example, go to a lower time frame, look for a breakout trade, trade a break and retest approach, or use any other approach that you are familiar with. But In general, it is always recommended to wait for the market to break the structure and break out of such a level, which happens now. You can see the market has now fully closed outside of the range and has been moving lower. So now the market has actually changed the trend dynamics, and it went from making higher highs and higher lows to failing to make a higher high, and now for the first time making a lower high. So this indicates a very strong signal in the markets that the trend is reversing. You can see the market is making a retest. It moved higher, tested the previous candle lows, and let's see what happens now. It seems like the retest is successful. The market has been moving away after the retest, and now you can see the trend is unfolding to the downside, away from the exhaustion zone and away from this double top. Approaching your reversals with the exhaustion zones this way is a more robust approach, because you're not only trading based on the exhaustion zones, but you're looking for the context of a very strong trend that is slowing down, having a failed breakout at the double top, a huge candlestick, a breakout approach on the lower time frame. This will turn into a pullback approach, and then this is how you may find much better trading opportunities using the exhaustion zones to look for reversals.